Hi, welcome to this episode of Andy Makes Sense of It. In this episode, we're going to be talking about third quarter 2025 earnings releases between Home Depot, Lowe's, and the online bookseller. More about the online bookseller later. But I do want, there's a caveat that I want to get covered first. I think if you watched my intro, you know that I recently retired from Home Depot. I worked there for 15 years, had a great time. One of the things that I used to do when I was there was something that we called Watch What Happened This Quarter Live with Andy Jerger. That's me. And that thing every quarter, I always said I had 8 favorite days of the year. The 4 days that Home Depot would release earnings and the 4 days that Lowe's would release earnings. And what I would do on those days, once a quarter, is I would do what I'm about to do right now. So it's a compare and contrast between quarterly earnings results. We're going to go through that in a second, and I think you're going to enjoy it. Why do I think that? Man, I built that thing. We built that thing organically. When I left, I had between 850 and 900 folks attending this thing, which just blew me away. And if you're a member, if you are part of the crew, thank you so much for doing that. And thank you for continuing that in this YouTube channel as we move forward. I'm not only going to be doing earnings releases, I'm going to continue that tradition, but I'm also going to add some things to it. Maybe some talk about, hey, how do taxes work? I'm not going to tell you how to do your taxes, but I'm going to tell you how taxes work. How do loans work? What do I have to do to take out a loan? Back on the finance front, man, there are a lot of things that we can talk about. And as I go through this, I'm going to highlight some of them. So maybe, hopefully, as we get more episodes, you can join in and you can learn something you just didn't know about. So this whole presentation is going to be very Home Depot centric. So if you're a Lowe's person or if you're a part of the online bookseller, you might not want to see this and you may want to go watch something else. Or you may want to see what happens behind the scenes. One of the things I need to point out, this is a tradition. I always have to wear the money tie. So the money tie is worn on the day of earnings. That's why I'm here wearing this. I did this thing, well, like I said, for more than a decade. I built this thing and it turned out to be part of my brand. And probably one of the things we're going to talk about on Andy Makes Sense of It at some point is professional presence and branding and that kind of stuff from a real world perspective from somebody who lived and breathed it for a while. All right, that being said, let's get ready. Next thing we're going to do is I'm going to get a PowerPoint fired up and we're going to walk through the results of third quarter 2025 earnings for Home Depot, Lowe's, and the online bookseller. Okay, so let's get into it. Let's talk about third quarter results for Lowe's, Home Depot, and the online bookseller. Third quarter 2025. All right, so guys, for the folks that work at Home Depot, you guys remember this, you know about this. What did you do in the third quarter? You kicked ass. This is a cartoon representation with a donkey, also known as an ass. And there's 3 quarters, and it makes me laugh, and I think it's funny, so I'm going to continue to do it. All right, so you guys did a great job. In the third quarter, revenue and earnings, let's just get this out of the way. Highest third quarter revenue in company history. Did you hear what I just said to you? The highest third quarter revenue in company history, $1.1 billion above Q3 of last year, 2.8% above Q3 of last year. That number, $41,352,000,000. That's $41,000 million. Earnings, my favorite number, the 6th highest third quarter earnings in company history. $47 million below last year, about 1.3% below last year. That number, $3,601,000,000 that we were able to put in the bank. More to come on that in a second. All right, so let's take a look back in history. So if we go back to 2015, third quarter revenues, a nice stepping stone up to 2020, where we had a huge jump because of pandemic spending by crazed consumers, which was awesome. And then we've had a steady growth since then, a little tumble there in 2023, but then came back in 24 and in 25. There's that $41 billion number and 2.8% increase. And don't you ever forget that you matter. Doesn't matter what part of the organization you work in. It doesn't matter where you do that work. If you're in a store, whether you're at the SSC, whether you work from home, whether you work from the SSC, or in a DC, wherever, doesn't matter where you do it, but it does matter how you do that work. So continue to be the best doer you can be. You are part of a team that continues to crush it. You do matter. And you're like, Andy, how do you know all of these things? You don't know if I matter or not. I know because these numbers don't make themselves. You help to make this happen. All right. So let's take August, September, October. That's third quarter, our fiscal third hour. Home Depot's, sorry guys, I'm always going to say hour, even though I may not be a part of the team anymore. So August, September, October is the third quarter. In August, Home Depot said, "Hey, we're going to take $10 million and we're going to invest it in skilled trades training. We launched a partnership with the Boys and Girls Club of America. We need Path to Pro. We need people doing pro work, and so we need to fund that and move that forward." Then in September, this is cool. In September, we finished the acquisition of GMS. We talked about this at the end of the second quarter. We acquired Gypsum Management and Supply Company, Supply Inc. Interesting thing about this is, and I don't know if you guys, it's interesting to me anyway. So you got Home Depot, you got SRS, and now you have GMS. The acquisition, the acquired company SRS acquired GMS. It all rolls up into one vertical. It's all, it's all Home Depot. But to me, it's just interesting that it really wasn't Home Depot that bought GMS. It was SRS that bought GMS. Anyway, I think you guys know my love of memes. And if I could do this whole thing with memes, I would do it. I was hoping that I could use this particular meme this time around, and I was able to do it for October. Home Depot committed $1 million to hurricane relief efforts for an island where they don't even have stores. What are you talking about, Andy? Yeah, so this happened in October. We said, hey, we got $1 million. We're going to commit to Hurricane Melissa relief funds. Hurricane Melissa rolled through Jamaica and some of the other islands in the Caribbean. And yeah, so that happened. Glad I could do that. Anyway, it's just funny to me. So when we released our earnings, the news from the street came out. What these things should have said is HD beats top line. Remember, top line is revenue, bottom line is earnings. It's because it's the top line on the sheet and it's the bottom line of the sheet. Anyway, it should have said HD beats top line, misses bottom line, updates 2025 guidance. But doesn't really say that. So our revenue was up. And remember, guys, had it not been for those acquisitions of SRS and GMS, I would hate to think where we would be revenue-wise. But anyway, at the end of every quarter, Ted Decker, our esteemed CEO, has some words to say. And this time he says, hey, our results missed our expectations. I'm not going to read this to you, but you guys can do this. Primarily due to lack of storms, which resulted in greater than expected pressure in certain categories. You're like, we really rely on hurricanes and storms. We don't rely on them, but remember, they are a part of our history. So it's legit. If we had storms in previous years and not this one, that there were some sales that we missed simply because there were no storms. So thankfully, humanity-wise, there were no storms, but that's the reason that our revenue was the way it was. So 3Q 2025 weather, where was it? Really didn't happen, and it had an adverse impact on our earning, or on our revenue. We'll get to that in a second. So additionally, while underlying demand in the business, blah, 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 I'm not going to read it to you guys. You can read it. But if I dig a little deeper in there and make Andy make sense of it, Even though our usual business was stable, we really anticipated additional customers and sales in the third quarter of 2025. And then we believe that consumer uncertainty, let's do the same thing. I'm not going to read that to you guys, but if I dig a little deeper and put on my Andy Makes Sense of It hat, hey, come to think of it, consumers are feeling uncertainty for several reasons. We should probably adjust our guidance moving forward. And that's what we did. So Lowe's news from the street after they released not as many circles, not as many bells and whistles, not as many rectangles there. What this should have said, though, is Lowe's misses top and bottom line expectations. These headlines, they don't really tell the whole truth, in my personal opinion. Yes, the revenue was up versus last year, but not to what analysts expected. And earnings beat is based on something called adjusted diluted earnings per share. That sounds a little iffy. Anyway, so the same thing. Marvin Ellison is the CEO over at Lowe's. His comments are here. I'm not going to read them to you guys. You guys can see that. A little bit of history between uh, uh, Home Depot and Marvin. Marvin was here for a long time. He was here when I was here, and he moved on to be CEO over at J.C. Penney. The job at Lowe's became available, so he became CEO at J.C. Penney, and then the job came up in at Lowe's, so he took over there. So anyway, Marvin always likes to give, in my opinion, I don't know if this is true or not. Seems like he always likes to give little digs into Ted. So the company delivered another quarter of positive comp sales. We're pleased to start November positive comp sales. But Marvin also mentioned, hey, headwinds related to hurricane activity in the prior year. And then he's got to say, with the closing of the FBM acquisition, and he's like, hey, we're doing acquisitions over here too. Okay, next, this is the meat and potatoes of the whole thing. When we do this, we really only review 4 financial measures. We review revenue, also known as sales. Revenue includes sales, but that's not everything that's included in there. So we know that the big kahuna of all of this is store and online sales, of course. But don't forget, there's things like the GMS revenue that comes in here, the SRS revenue that comes in here, HD Supply, any of our subsidiaries, all of that gets included in revenue. We've got all kinds of fees. There's credit card fees and installation fees and this and that. So really, any way that any of us bring cash in is known as revenue. It's not just sales. Sales is a part of revenue, but that's not the whole story. Comp store sales, also known as comps. So if you've got a store that was open in 2024 and he was open in 2025, he's comparable. If he was closed in 24 and new store in 2025, not comparable. Those sales still are included in revenue, but we don't we don't compare them. We don't use them for the comp store sales. Same as if we closed a store between 2024 and 2025, it's not comparable, so it's not included. It's a very specific measure to say, hey, investors, whoever's interested, we had inventory of stores last year and they kicked butt, and those same stores that were there last year did a great job this year. So we want to measure the comparable store sales between the two. Of course, if you open 100 new stores, well, you would hope that you would have more revenue one year versus the other because you've got more stores open. But if you can generate more or the same amount of sales that with comparable stores, then that's a good thing, and that's why folks look at it. So then the next thing we want to look at is revenue. It's also known as profit. Good grief, I can't read or I can't talk. All right, so the next thing I want to look is the earnings, also known as profit. That's revenue minus expenses. It's really all it is. It's that amount of money that we brought in minus all of our expenses, including taxes and rent and payroll and paying for product and all that other stuff. I don't know if you guys remember, so a while back I came up with something called SWAT it, which means sell something for more than you paid for it while covering your costs associated with selling it, and include extra dollars, take it to the bank, invest in your company, talent, reward them. So SWAT it, business 101, pretty much. Okay, Earnings per share, aka EPS. That's literally what it says in the title. Earnings dollars divided by the number of outstanding shares. So, for example, in our third quarter, remember there's that $3.6 billion number that we put in the bank, divided by the outstanding shares of about 995 million shares. That's $3.62 was our EPS for Q3, and that's how the math comes up with it. All right. You guys remember a couple quarters ago, we started looking at revenue by quarter. So normally when we do this, we just focus on third quarter or second quarter, first, whatever quarter we're going over. But a couple of quarters ago, we said, you know what, let's take a look over all of the quarters and put a trend line in and see where we are. I'd much rather be on the orange team than on the blue team, flying in the sky versus whatever it is that they're doing. All right. So here's the number. Third quarter, there's that $41 billion number, the 2.8% increase. They had a $20 billion number with a 3.2% increase. And I got to tell you, so I'm looking at that $20 billion number and I'm thinking, I got to get into the Wayback Machine and I got to look at something. So Home Depot had revenue in the third quarter of 2014 of $20 billion, $20.5 billion. And you're like, but Andy, how you don't know that's what I went back in the time machine and I got the documentation. So there is Home Depot's earnings report for third quarter of 2014, where we said we had $20,500,000,000 in revenue. They're about 11 years behind us. Maybe they'll catch up. Who knows? Anyway, so then let's go take a look at comp sales. So comp store sales, we had total comp store sales of 0.2%. Where's the Lowe's number? Oh, that's right. They don't have any international stores. They only have stores in the U.S. This includes our stores in the United States, Canada, and Mexico. They don't have that, but they do have stores in the U.S. So if we do the U.S. comparable store sales, we had 0.1% and they had 0.4%. The earnings, my favorite number, our Q3 earnings, there's that $3.6 billion number. We're down like 1.3%. They had a $1.6 billion number, but they're down 4.7%. But you take a look at earnings per share. There's that earnings per share that we talked about. There's that $3.62 that I mentioned. We did the math on that. We had a 1.4% decline. The X number, that's the expected number from Wall Street. The analyst said, Home Depot is going to be about $3.82. The whisper number is that we might know a little bit more about what's going on than some of the analysts. So we're going to say 380. Didn't matter. We didn't hit either one of those. And then Lowe's, same way. We both missed on bottom line, and that's what it means when we miss on bottom line, that we miss the expectations of the Wall Street analysts. Then another very important thing we take a peek at is the selected sales data that the company provides at the end of the year or at the end of the quarter. So this looks specifically at customer transactions, the number of people that come in and out and buy things in the store, and the average ticket price of what they buy once they come into the store and do those transactions. And in this instance, a slightly fewer customers spent a little bit more. So a few less people came in, but they spent a little bit more when they came in. So very healthy, very good indication of how things are doing with retail. So then the online bookseller. This was pretty much the way we always looked at them. We said at Home Depot, there's the $41 billion revenue with the $3 billion in earnings, which is an 8.7% return. So I love that number. That's my favorite number. The revenue versus the earnings and the 8.7, that means my dollars are working 8.7. I'm returning 8.7% to the company. Lowe's, a little bit less, it's 7.8%. But then very respectively, the online bookseller, they had revenue in the third quarter of $180 billion and $21 billion in earnings. But if you guys will remember, we started to break those down a bit. So we said, hey, we're really only competing against them for their North America product sales. Still, though, it's the $106 billion, and they had a return of $5.4 billion for earnings, which is a 5.5% return. Not great. And then if you look at their international product sales, they were at $40 billion with a 1.4%, with a $1.4 billion return for 3.6%. That ain't great either. But holy cow, when you get down to that crazy AWS thing, uh, average web services, that's what that stands for, is average web service. No. We renamed it the last time. It's awful web services. Anyway, awful web services returned 42.1%. The revenue on that was $33 billion, but they returned almost $14 billion in earnings. Ugh, that's crazy, man. Anyway, that's why it looks like, when we go back and take a look at that 11.8%, that's why that 11.8% looks so good, is because of the crazy amount of money they're making on that average web services thing. All right. So, man, thank you guys for tuning in. That's it. That's the end of the program, as it were. We're getting some information in about how people are liking this. I made a presentation. Pretty much everyone's still unimpressed. I don't know what I got to do to get out of that unimpressed line for you guys. But man, thank you so much for joining. I appreciate you. We will talk again next time about something, I promise.